And let's just call it the slow melt-up, Carl. It continues. It continues not just in the United States, but it also continues overseas. Just take a look. Shanghai had another great night. Obviously, there's a lot of optimism about trade talks here. You talk of zero tariffs, talk about a free trade zone. Oh, that'll move to Shanghai for sure. Germany, though, had good. The autos are doing good. In Germany, the stock 600, kind of the S&P 500 of Europe, also has been going through a slow melt-up in the last few days. Here in the U.S., Jim's right. Semi's been a leadership group, but that's been true for a while. But a really good day for the SMH today. We've got AMD, ST Micro, Micron, all up like 3%. Taiwan Semi strong. Banks have been strong as yields have been moving up in the last few days. Materials, industrial, so they're just cyclicals moving, and your utilities and consumer staples have been lagging. So here is your cyclical rally that we've been engaging in. I want to point out that the recent rally began on Thursday. The stock rally has corresponded to the yield rally. If you put up the chart the last 5 days, you can see the S&P 500. There is your yellow line versus the 10-year note yield, which is the white line that you're seeing there. This is the last 5 days. That is a fantastic correspondence right there. So yields were what, 2.39 last Thursday? They're 2.51, somewhere around there right now. We've seen a 3% move in the S&P 500. I don't not think that is an accident, and that is also corresponding to the rally that we have seen in the banks recently. Let me just comment on this Caterpillar thing, because it's not clear this guy is right about this whole argument here. So Deutsche Bank, we've got a downgrade of Caterpillar. The arguments are pretty simple. China continues to weaken. Europe's slowing more than expected. And 2019 is a cyclical earnings peak. This was precisely the playbook in December that everybody had. This was the story in December that was going to happen in 2019. Recently, though, the market has been saying that this thesis that China and Europe are going to get continually worse from here has not really been correct. That's the debate. Caterpillar, by the way, has not been popular with analysts for a long time. It's about 75% of the street has buys typically on stuff. You know, 8 buy, 8 hold, 1 sell. You know, not exactly a popular rating for this company altogether. I think the important thing is the markets have been moving in the last several weeks, and indeed even the last several days, trying to argue precisely the opposite of what he has been arguing, that China is obtaining some kind of bottom. Europe is struggling to find a bottom, may not be clear, but look at the market. Just look at what the market is telling you. Shanghai's at a 52-week high, essentially. Let's not quibble about a few points. Germany's the highest since October. The stock 600, the highest since August, and our stock market is the highest since October. That argues against this thesis. Maybe the guy is right, but it sounds like December to me right now. And by the way, Caterpillar is only down fractionally about 0.3% on that downgrade.